This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. Going to give you a stock market update, and we got some things to talk about because one big change in the market conditions, a key indicator that I like to look at is making a shift, and I think it's pretty important. We want to take a hard look at it. Let's go ahead and get into this. First of all, let me just say that if you're interested in learning more about some of these techniques, I would start with the book. I'm offering it at a discount right now, rabilstockresearch.com/book. You can get some information on that. Okay, first off, as we look at the overall market conditions, we have the sentiment jumping. All right, it's up to 49%. Now, again, I have been using this Investors Intelligence Sentiment number since about 1988, 1989. Okay, I've been following it for a long time. Now, this is one of the highest readings we've ever gotten, and it's the thing is that one thing we watch on this is when the number is high, it doesn't necessarily mean the market's going to just drop swiftly. It means there's a higher risk. When the market gets really low and overdone, like meaning the sentiment drops and everybody gets bearish, that's more, you look for a quicker, faster, massive reversal that can be a major bottom, right? So it's a little bit different at tops than it is at bottoms, is the point I'm trying to make. When there's panic, you really want to be diving in, but when there's excessive kind of greed, which is the opposite of that, it doesn't necessarily mean it's going to top right away, but there's higher risk. And so I've had this sentiment number. This actually is way up here at negative. Probably should be all the way to the right, but it's about as negative as it gets. All right. Now the overbought oversold oscillator, the 5 RSI, has dropped down under 50. So we're back to neutral. I've put that here. The key thing, and I'm going to talk about this in a second, is both the volatility on the daily and the weekly has jumped up. All right. The volatility is growing as we pull back. That's not really what we wanted to see. Now, in terms of the trends, before I close this down here, the daily trend has turned to neutral. But the monthly and weekly trend and momentum are still okay. Last week, I flipped the momentum on the daily to neutral. Weekly is very, very close. I'll show you that in a second. All right, first of all, let's just look at what's going on the daily volatility. We've been talking about how this is starting to clip up and move to the upside last week. Now it's really definitive, and we have gotten oversold. Okay, but this is telling me that there's still some risk in this. We could chop around here. We could see this move up. Maybe it bounces to get off oversold and get back to neutral, and then we've got more risk. As long as this is rising, you have to sort of assume that you need to trend lightly here. If you're looking to be a buyer on weakness, this isn't the kind of weakness I'm looking for. All right, now look at what's taking place on the weekly chart. We have this sweeping cupping reversal pattern developing, and I have been talking about this for a while. As this has dropped below the moving average, but the moving average had not rolled over, I said, look, if the volatility on the pullback is too big, we're going to see this pop back up and form that 1, 2, 3. All right, so we're really close to it. I would say that we did complete that 1, 2, 3. But as this continues to grow, this will clearly move to the upside. Now, again, the timing issue is a little bit different, right? We don't really have, it's working its way, it's working off this overbought condition, getting a little bit oversold in the near term. But what this is telling me is that I'm not necessarily looking to buy this first pullback, certainly not for longer term trades right now. So that's kind of the key to this. I think, now one of the things that I talked about on my Stock Talk show today is that this rolled over to the downside. We clearly broke, and I was looking at the Qs, but the reality is the same thing. Once we break the 18 and it rolls, the odds are we're going to work our way down to the next 18. That's a great rule of thumb. It's a rule of thumb. It doesn't mean it's going to happen 100% of the time, but it's a really Good rule of thumb, just something to be on the lookout for. Similar to what happened back here in April, it dropped, it broke through the 18, that rolled over, and we ended up working our way back down to the 18 week and then moved to the upside. Now, if we end up breaking that, then we have risk down to the next time frame. See what I mean? So we want to use these 18s as sort of like a really good gauge of where the next risk level is. So right now, I would be looking at that 530 level on the S&P as the first area of support. Now on the S&P, it's like 5250 to 5350 is the ballpark area of where you want to be watching. All right. So let's switch this over. I want to make sure we cover the different time frames. So I mentioned this last week, and I was saying how I just was getting a little uncomfortable with how far and how long this has been far away from the 18. It doesn't mean it's necessarily imminent. We have to use the smaller time frames, but it was bothering me a little bit. And now with not that many days left, in about a week worth of maybe 4 or 5 trading days left, we've got this topping tail developing. Now, that doesn't mean anything by itself, but the fact that we're a little stretched away, we've made a little bit of a push, and now if we close like this, I mean, we got enough time for this to come back. So it's possible it won't end this way, and I like to really wait for that monthly bar to close, all right? But it's possible we could do that, and it could mean that we want to come in and consolidate a little bit more. I think that would be the healthy thing to do. Now, the momentum on the monthly is still fine. I'm not looking for this to fall apart. What I mentioned last week is the potential for this to come down into the low 500 area, and that's a possibility here. Now, I'm not saying that it's got to happen. I'm just saying that we got to look at this and say it's been a little while. We're getting a little stretched. Maybe it consolidates a little bit, meets up with the 18-month line somewhere down the road. Now, we've got a pretty big reversal bar at the top, and now we've got a pretty big red bar to follow. We have rolled this over with divergence. You see how that, but we have one more day left in the week. So this isn't over yet, meaning we've crossed down below the signal line, but it's not until we end the week. We don't know for sure, but it's something you want to be watching. See how this finishes the week. The other thing we want to be watching is to see if this line here can climb above this line. All right, this little peak here doesn't mean anything because it wasn't a true pivot. All right, that's right out of my course. If you don't understand the pivots yet, you gotta kind of, I think taking the course would really help. And then this low here is the key because that was a low pivot. So we kind of need these two to come together. If they do, then that's a convincing sign that we're going to go through something a little bit longer. That's what happened in the daily chart last week. I spent some time going through this and said that we were in a contraction phase last week, and we're now seeing the the result of that, the longer consolidation, and the likelihood that we're going back down towards the 18-week line. How we react at that 18-week, I think, is very important. The 525 level is the support level. If we were to see a contraction take place, then the odds are the 18 isn't going to hold, and we probably should be looking for a trend support. Let me just, price support. So this is price support, okay? And this is trend support. Guys, hopefully you understand that. We look at trend support when the momentum is good. We're looking at the 18 holding, at least the area of the 18 holding. In this case, the momentum is good, but if we go into contraction, then we'd be looking for that to break, and I'd be looking for support, price support, as being the most likely area. Now, there's not a huge difference in those, but it's just something you want to be aware of. Sometimes there's a little bit of a separation between price support and trend support, and you want to know what those levels are and what the likelihood is of which one is going to hold. So we always use the smaller time frames to help with that, and right now, I mentioned the momentum is pretty good, but the ADX is turning down. It's not turning down from a really high level, which is what was happening in the ADX on the daily chart, which is reason why I was a little bit quicker to maybe turn that to neutral. This one needs, I'd like to get a little bit more convincing that these are coming together, even though the MACD, because we haven't closed the week and because this hasn't contracted, I left it at positive on the momentum. Okay, let's look at the hourly, because this is really what's in command right now in terms of momentum. You see how we flipped the script here? You see how red took over with this strength to the downside? And I mentioned last week that you'd be wanting to look for an RSI sell signal as a potential hedging strategy on this rally. So hopefully some of you guys maybe took advantage of that, and you'd be hedged right now as the market is dropping. That's for your longer term holds, right? If you want to hold through a pullback in the market, because we don't know how much this is going to, we don't know how big of a correction we're going to get. So we've got to be careful during these pullback phases. So a lot of times I'll use momentum divergence. So we get kind of a flip of the script on the daily and a little bit of momentum divergence here. We knew we were separated away from the monthly and the weekly, so I felt like there was some risk, and that's why I mentioned last week that if you got the RSI sell signal, that it wouldn't be a bad spot with the zero line reversal and the fact that the sellers were in command. Well, look at what happened on this next move. We got another thrust to the downside with a lot of strength in the sellers. And now we're back testing the low again. So the volume pattern is definitely pretty negative. Something there's definitely a little bit of risk right now, right? I mean, and it's possible we're going to work our way down. If we break the 18, we could work our way all the way down to the 40. Now, I don't want to jump into any conclusions. I'm not saying that that's going to happen. The fact of the matter is the momentum going into this really wasn't that bad, but I'm playing it day by day, and I'm letting the short-term time frame sort of control things right now. Until we get down to the 18-week and kind of prove ourselves, I would want to see how this hedge does. And, if it can turn back up through this prior peak that was just made in the 18 on the hourly, then maybe I would take it off. And it might only be like a break-even trade or something like that by the time it comes back up. Actually, it'd be a small profit. But we would want to see if this does happen. Let's say we're down here and we get a rally. See how it reacts at the 18-day, because we never really got a 2 to develop on the daily chart. This was a little too quick for my taste. I think we'd want to see some kind of a rally up towards the 18 now that it's turned over. And if that happens, there might be a little bit more risk. So these are the kinds of things I'm watching right now. I think we wanted to stay on top of all this and be a little bit more cautious when it comes to new buying, just based on the volatility right now. Too much volatility at this point. All right, let me know if you have any questions. Thanks.